Hi, Slopers, September 6, 2012, our post-ECB announcement. And two big events remain in this crazy month. The first one's tomorrow, jobs report before the market opens. And next Thursday, the big kahuna, the Fed. So one of the very few bright spots for me today was bonds. I mentioned yesterday the very clean setup for a bond short, and that worked out nicely, down about a full percent today. So you can see here, this line's been very helpful. It had been support for a while, and now it's kind of changed roles into resistance. I went ahead and covered my TLT short on this because, a little too uncertain what a jobs report is going to do this tomorrow. But that was a good item to be short, unlike, say, most of the stocks that I had short positions in. And on the leverage ETF side, the TMV was up almost 5 full percent today, so a nice push higher on the triple bearish fund there on the bonds. The euro, in spite of all the big announcements and press releases and big news, the move itself was kind of small, only about 1/4%. We were strong going into the news, and the news came out, got a bit of a lift, and then it tumbled real fast. And the sort of interesting tell was, even when this was going on, the ES and the NQ were still substantially higher than yesterday. So it was evident that it wasn't just following lockstep with the euro. Euro strength begets huge equity strength, and euro weakness simply makes it a little less strong on the equity side. You can see that more clearly if we pull up a left scale. I can pull up, say, the ES here, and you can see that it's hardly even noticeable that the euro got softer at all. The ES was just very, very strong all day. And the NQ, even more so. If we look at the NQ, we were up, well, it looks small now because we're into a new trading day, but it was up about 50 points or so. And then we're getting more strength now, even into the new trading day. One area of weakness, interestingly enough, was crude oil. And I shorted USO somewhere around here because I took great interest in the fact that the horizontal line that I had drawn hadn't been exceeded. And that was in the face of a lot of equity strength and some euro strength, and of course a lot of strength in gold and silver, but crude oil seemed to be kind of like left out in the cold. So that was a pretty good trade for the day. That was I shorted it up here, and it was one of the very few assets that actually declined in price, with the notable exception, of course, of bonds, which are kind of their own world. The shorts that I have been following, and I'll just, in case I don't remember, I'll just say now that I've, in the interest of survival, I have changed the mix of my positions to have more on the long side, so kind of a 45-55 split, looking at long 45%, short 55%, but the entire schmear only 50% committed, still half in cash. But the shorts that I do follow fall into about 3 different categories. One category is stuff that just has blown up. It looked good but failed. AIR is a great example of that. This is symbol AIR. We see here that it pushed way aside this neckline. I got stopped out immediately today on this one. But simply stated, a chart this good should work. And if a chart this good can't work, then the market's just not ready to fall. So that's category one. Another category, which is a thinner list, are those items that are still working nicely, like this one, TEO. Very pretty topping pattern, and even in a day like today was down about 6% at one point, and is threatening this important $10 level. And then the biggest category of all are charts that are still very plausible shorts, but I'm not ready to enter yet because they look like they could bounce. CLF is a great example of this. I'd be delighted to short this like in the lower 40s. Right now, it's just too risky. I'd rather see better prices, and it's still a fantastic pattern. Now, of course, gold has been continuing to thrive, up another 0.5% on this. We're in the 1700s now on this. And the wonderful world of miners definitely took it in the chin today. I have deleted a horizontal line I'd set down here because it was penetrated today. And really the last hope here for the analog is this line at 495.70, way up at that gap, which is a goodly distance away. It's 25 points from here. So kind of sitting that one out. I still have, so in my real portfolio, the big one, I don't have any GDX. In my teeny weeny options portfolio, I still have GDX puts, which expire in October, and obviously they had a rotten day today. One interesting specific short setup was ANV, just beneath this trend line here, this Allied Nevada Gold. It's a good looking pattern. But as I mentioned, I'm buying some stocks now, which for some of you may be a signal the market's going to turn down now, but it is pretty bad when poor old Tim is actually buying stuff. They fall into a couple of broad categories. One are the sort of bounce plays, and the other are just good straight up long positions. The bounce plays are things like this. AAV, this Advantage Oil and Gas. To my view, it's ceased this downtrend and is pushing into a new uptrend here. ACI, this one has been horribly battered, but I think could be setting itself up for a nice base and a bounce. AMD, this descending trend line, we've got these three nice touch points, and we had a nice 4+% bounce on this today, so observing this channel, we're on the lower end of that. And then I did a quick post on this today, DreamWorks, DWA, kind of the Shrek folks there. I think I got the idea for this one because Disney has just been unbelievable. Looking at DIS, just a new, I think, lifetime high, never before seen today. So that got me to sort of thinking about DWA, and this thing's been quite the opposite, but it does look like it's kind of at the lower end of this rather broad basing pattern. So those are the bounce plays. The straight up, good pattern plays are AIG, which I did a post on today or earlier. The most unsexy stock on the planet, Campbell Soup, CPB. Nice breakout there. DDR, which I don't know what they do, but it's DDR Corporation. Here's one that doesn't have a heck of a lot of history, but I really like this chart. KORS, Michael Kors. I don't know if that's shoes or clothing or what, but it's a good-looking chart and a relatively young chart. And then finally, speaking of boring stuff, soap, Procter & Gamble. This is PG. Here again, I think that might be a new, almost certainly is a new lifetime high. So anyway, the bear case definitely took some serious damage today. We may not see any chance of real weakness until after the election at this point, because to my mind today was sort of our last best hope to really start easing down again. Tomorrow could be another big up day. Next week's Fed announcement could be another push higher. So it's looking pretty discouraging for equity bears. Thus I have kept my cash allocation fairly high, and I've brought some longs into the mix. And we'll just keep tucking away, promising looking shorts for the future into my bear pin watch list. So anyway, hope some of you had a good day today. I'm sure you must have, because I know we've got some rampant bulls on slope too. And for the rest of us, just try to preserve your capital as best you can and keep an open mind. That will be it from me. We'll see what it looks like on the other side of the unemployment report, and I bid you a good evening.